You're watching Street Smart. I'm Matt Miller. We're seeing a bit of a rebound in equity markets here. We were down about 1% on the S&P, down about 100 points on the Dow Jones Industrial Average, and the Nasdaq doing the worst of the group. You can see they're coming back as Apple recovers a little bit and investors pile into those defensive sectors. So consumer discretionary stocks are doing well, telecom stocks are doing well, and even utilities and energy are climbing back up. And that's where stocks stand with 30 minutes to go until the closing bell.
Okay, and in less than 30 minutes, HP, Hewlett Packard, will open its books. The company is knee-deep in its turnaround plan. And if you look, the stock's performance for the year, the company may finally, as this chart suggests, be on the mend. Take a look. It's up about 18%, the best performing stock so far in 2013. That's a reversal of fortune after last year's crushing nearly 44% decline when it was the worst performer. So, will today's earnings report confirm the comeback? Let's find out what makes Hewlett Packard tick as a company and as a stock. Brian White on the fundamentals, Larry Shover on the charts, Tim Bigham with your options trade. All right, first over to you, Brian. What are you looking for out of earnings today, and how are you feeling about HP these days?
Well, you know, we have a sell rating on HP. I think there's a lot of challenges still on the horizon. This is a long-term turnaround plan. They did guide down last quarter pretty significantly. So I think the quarter will at least be in line with our expectations with the street, maybe a little bit of upside. I'm more worried about, you know, fiscal 13. They have an outlook out there that really assumes a pretty big ramp in second half of the year, and I don't see how they get there. So while they may show a little upside in the quarter, I think it's going to be a tough road ahead for HP and investors.
Okay, tough road ahead. When you're looking at these charts from a technical perspective, Larry Shover, are you also seeing a tough road ahead for HP?
Yeah, you know, I really am. Look at the technical charts. I mean, I know that Hewlett Packard is the best performing Dow stock of 2013, but the technicals, especially the momentum technicals, clearly tell a different story. Right here, I'm looking at a 100-day, 200-day moving average going back 2 years in Hewlett Packard. And if you look at the charts, what you're looking for here is a death cross or a crossover, which we saw in June 2011. Since that time, we see the 100-day moving average remaining quite below the 200-day moving average, and that has not changed whatsoever, just enforcing that bearish conviction to the stock.
Okay, sounds like if you were to rate this one, you'd be giving it a sell too.
Yes.
All right, let's go over to the options trader, Tim Bigham joining us. Are you feeling any better than these guys?
Actually, the option guys are taking really a contrarian opinion to the two previous technical and fundamental guys. You know, Hewlett being one of the dogs of the Dow last year, certainly a best performer. Option guys are afraid of, you know, kind of that you let the dogs out to the upside here. Yeah. The 17.5 February calls trading big volume, big open interest. So they're protecting the upside for the first time in a while. I'm taking advantage of that, selling some of those rich February calls, buying some Marches to hedge here. But option guys may be looking for a breakout above that 1750 200-day moving average. If it does, we might see a big pop.
Brian White, you mentioned something earlier. You said that you're very concerned about the second half of the year, that the expectations the company has for itself are just too high. They're really building in too much of a good scenario. Is that based on your concern about the overall economy, or based on your concerns about whether or not businesses are really going to be spending money on HP's products right now?
Well, when I look across my tech universe, we cut numbers on about 65% of our coverage universe for the March quarter. So part of it is just a sluggish spending environment. Part of it is I do think the competition in HP's world has really heated up. You heard Dell talk about significant pricing pressure in PCs. And in the IT market, Cisco, EMC, Oracle, kind of non-traditional competitors are becoming bigger competitors to HP, and I think that's only going to get worse. IT budgets slow, you're going to see increased competition. A lot of these companies didn't compete with HP in a major way, but if you look at Oracle, for example, they have a major hardware offering now, and they're starting to do very well in that area.
Any of this being reflected, I know, you know, technically speaking, Larry, you're not looking at these fundamentals, but do you see this getting reflected in what you're seeing in the stock price?
Well, right now in the stock price, we're not seeing a whole lot of anything except for bearish conviction. When you look at the shorter time frames of momentum indicators, like a 10 versus 20 day, there's a lot of noise, because right now there's been a lot of bottom fishing. But let's keep in mind, through this chart here, there's been a lot of bottom fishing from $30 a share down to $17 a share where we are now. So we really need to see what they call a golden cross, a severe conviction change where we have the short-term momentum going above the 200-day momentum until people really get bullish in the stock.
All right, we're going to have to leave it there. Thanks so much to the whole gang. Here's the cheat sheet for you on Hewlett Packard. We heard from, well, you could say two very big bears. Brian White saying sell. He says this turnaround will take a long time. Larry Shover says this stock has been in a long-term funk. It's going to be pretty difficult to get out of it. And Tim Bigham, he's calling HP one of the dogs of the Dow, and for that reason, he's playing it neutral. Be sure to keep it here. We're going to have full earnings coverage when those numbers cross just in the next hour. Meanwhile, tomorrow, we're giving you 3 strategies ahead of Lowe's earnings. But I'd like to hear what your take is. What are you doing? You buying, you selling, and why?